Alright, so I'm gonna go over this trade that I took on gold. So we'll quickly start off on the daily. So on the daily, we had this large displacement after sweeping all-time highs, and then we swept this low, and then we started to get this displacement on a daily again, inverting this daily fair value gap. So we have this inversion, and then we have this fair value gap being a balanced price range, or a BPR. So on this day being Wednesday, I think because we are personally, I didn't think we would go for the all-time highs because we had this large displacement already. We had 3 consecutive up close candles, and 2 of them were expansion profiles. So the likelihood that we would get another expansion daily candle wasn't too high, but of course, even if the probabilities are lower, they would get another expansion candle. We could have still got that anyway. But yeah, for me, I wasn't necessarily looking to frame shorts. Instead, I was mainly looking to frame longs from this daily fair value gap if we will get that. But the shorts idea behind it was that we swept the previous day high, and then we started to displace lower on the daily. And once I saw the daily candle, when I looked at the charts just before New York, I saw the daily candle had that previous day high sweep and was already trading around here, with the previous day low being close intact. So previous day high sweep, displacing lower, likely the previous day low, with the daily fair value gap being the drawn liquidity was the target. So once I seen that, I went down to the 4-hour time frame, and on the 4-hour time frame, once we swept the previous day high, we swept this high. And if you look at this chart right here, obviously in hindsight, it played out, but what I was seeing was a potential market maker sell model on the hourly, right? So seeing consolidation, displacement, consolidation, and then smart money reversal, and then a market maker sell model. These initial consolidations are usually the target, right? So once you get that smart money reversal, displacement lower, and you start seeing that hourly bearish order flow, then likely these lows are the next drawn liquidity, and then these lows being the next ones afterwards. So this is what I was seeing, and price was already trading somewhere down here towards the London session. So for me, I was seeing this as a smart money reversal, daily fair value gap as drawn liquidity, had that low risk buy here, and then now we'll come up into this hourly order block. And if you go on the 4-hour time frame as well, on the 4-hour time frame, we had this down close candle being a breaker, but to be honest, because the candle's kind of small, I was focusing more on this order block, but because most of the volume came from these candles. So we had this 4-hour order block. Mark it out like this. Four-hour OB. So that was the key level to look for shorts. And this next open low high close candle, which was the 2 a.m. candle, being London session, we came back into the order block, the 4-hour order block. And if you inspect on the 1 hour, we have this propulsion block here on the 1 hour, which we retraced into, and then we sold off from. So for me, all I wanted to see was some sort of lower time frame confirmation from the 1 hour and the 4-hour PDRAs. So price could have also came and swept this high, which is why I didn't want to, short like this fair value gap, for example, the propulsion block, and then put my stops above the propulsion block, because sometimes price can do this, come and sweep the internal high and then go lower. So that's why I didn't want to do something like this and then target this daily fair value gap. But yeah, for me, all I needed for continuation traders, since we're already in bearish order flow on the daily, on the hourly time frame, all I needed was some sort of stop run on the 15-minute time frame. Even the 5-minute time frame would have been fine, but preferably the 15, and then confirmation, and we'll go lower. So yeah, for me, you can't. For me, there's not really a high probability short on an hourly time frame to blindly place short, and then place your stop loss, because firstly, I didn't want to take a lower sell here when every other time frame except the hourly is against me here. So taking a short here on the hourly, that's not really the best idea. And then when price is already displacing all the way down here, with these lows being close intact, and we already swept this low and coming back higher, you don't really want to, price can also reverse after sweeping this low, so you don't want to try and be like, oh yeah, okay, propulsion block, let me short somewhere here, and then just pray, price will come, price wouldn't reverse from this low and come for these highs. So, and even if you try and short this propulsion block, you have to put your validation here, and then you'll get like a 1.28R. So firstly, the lower time frame confirmation gives you that, the extra confluence that we're actually going to go lower from these hourly PD arrays. And secondly, you get a better risk to reward trade by just doing that, waiting for that extra confirmation. So waiting for that continuation, and then once I seen price do this, so we swept this low, displaced higher, and then we swept this this internal high. Even this one, I was watching to see how would price react here, because price could come up here, sweep this internal high, fake market structure break. People would think, oh yeah, bullish order block, let me bullish fair value gap, let me try long this. So I wanted to see if price would show any displacement here, bearish displacement here after sweeping this high, but we didn't get that, which was probably better anyway, because the risk to reward would have been shit anyway. Say we invert these fair value gaps, you try short this, place your stop somewhere around here. To be fair, you could probably also get a 2-hour trade from that, but the range is pretty tight here, to be fair. But yeah, so instead we inverted this fair value gap, and then we came for this high instead. And then what I wanted to see was some displacement here, inverting these fair value gaps, and then that would have been my confirmation to go short, right? So another confluence is if we also closed. The first confluence would have been if we closed through this upper, this inversion fair value gap, reclaiming it. Then that would have been the first good confluence, right? Which we got that with this candle. Not only did this candle invert that, but we inverted these two bearish fair value gaps, bullish fair value gaps. So once I seen that, that was my confirmation to go short, and then I took this trade with my TPB in this daily fair value gap. And then what actually gave me the confidence to extra confidence was because you see on the M5, even the M15, you can see we have these internal highs that we engineered, right? So consolidation, manipulation, distribution, like a AMD, accumulation, manipulation, distribution, swept these internal highs, for respecting this 5-minute order block. So on the 5-minute, we're already forming a bearish structure, lower sell, displace it after confirming the lower sell. So we'll get in that. And then on the 15-minute as well, a bearish order block, tapped into the bearish order block, displacing lower. So this is actually a propulsion block, but so if you want it to be even more aggressive, which is what I was observing, you could already be short from this propulsion block, right? So you could have shorted here and then place your validation here, but which would have been a really good trade. But for me, because we still had these two imbalances here, I didn't want this price to come and sweep this low and then come all the way back higher. So for me, I waited for that closure beneath both the imbalances. I think even the upper imbalance, if you waited for that, that would have already been good enough. I would have taken a short, but both of them made this trade even more high probability, right? So once we got that confirmation, I went on the 5-minute time frame for an entry, and then we had this small 5-minute imbalance, which I waited for price to tap into this inside the middle of this inversion, and then that was the short. So I pretty much got a sniper entry on my MT5 with this wick, and then I just held the trade, and then it hit the daily fair value gap on my trading view, but on my MT5 I didn't get my fill. So once price was starting to consolidate around here, I just closed the trade around here. So initially it was a 2 hour trade, and I closed it for around like 1.8 1.7 hour. So yeah, that was basically the trade breakdown. Nice, I was gonna say typical, but yeah, I mean it is typical as well. There's a nice external to internal play, right? So previous day high sweep, large expansion prior, meaning we can expect price to go from external back into internal liquidity, and then see if we can get a continuation, which it looks like we might even be getting that now, right? Daily fair value gap as the key level, internal liquidity. We have this external high being the first draw, and then you have this all-time high being the next draw, right? So yeah, for these external to internal plays, you always want the hourly time frame on your side at least, and preferably the 4 hour. So see how we had that 4 hour confirmation from the order block, and then we had this 1 hour propulsion block as the key level. So all you have to do in this scenario is, if you can't get a decent risk to reward ratio by blindly shorting somewhere around here with a validation here, then the next best next option is to wait for that lower time frame confirmation, right, which is what we got here, and you can get like a nice 2 hour trade, and it gives you that confluence that price is actually willing to go lower from these hourly key levels, right? So yeah.